the goods, lesser with the services. But it was specifically decided by the advisor that this topic should be taken because just as the VAT practitioners who are going to go into the GST, they should know or learn a lot of aspects of service tax. Similarly, a lot of service tax people who were not very well conversant with the nitty-gritties of the VAT law should also have some overview of the goods part of the transactions which are going to happen under the GST law. Now, as such, this topic per se is a combination of around 6 topics. I have import, exports, SEZ, TDS, TCS, and e-commerce and refund. Now, we will first start with import and export. So today's agenda per se is imports, exports, SEZ, okay, TDS, TCS, e-commerce and refunds. Import. Now we will first go through the provisions per se. There are very few. Actually, import and export has also been briefly touched upon by Sunil Bhai. He has presented some view with respect to the imports and high seas, which of course we will touch upon in detail. But it is important to note that under the VAT laws, traditionally, imports and exports were never given to the states. It was always in the domain of the central government. Now, when we go through the definitions, see, although we are saying that GST is combination of goods and service tax, per se all along the Act, the basic distinction between the goods and the services continues to remain. In each of the aspects of supply, barring deemed sales transaction, where they are deeming it to be a service, otherwise, in each and every transaction of supply, whether it is a transaction of supply of goods or whether it is a transaction of supply of service, has to be distinctly identified. Now, because of this, the distinction and the history or carry forward of that history with respect to the goods also continues in some respect. To how much extent the history of those goods and the laws will continue and how much of it will go, that is what we will try and analyze upon with respect to the goods part of it. Now, import of goods and services. Import of goods with all its grammatical meanings and variations and cognate expressions means bringing the goods from outside the country into India. Now, if you see, the definition of goods is very simple per se, whereas when you come to definition of service, you have import of service means supply of service is located outside India, recipient of service located in India, place of service is in India. Now, in each place, the definition per se of goods and service will be distinct and the service definition will be more elaborate simply because of the reason that services are intangible and goods are tangible. Tracking of the goods is going to be easier and therefore the definition is also simpler. Whereas tracking of services is going to be difficult and therefore the definition seeks to encompass within itself as far as possible all kinds of things so that nothing is left out. So with that attitude, at each definition level also, the definitions of goods related items will be smaller or succinct, whereas with respect to services, it will be elaborate. Moving ahead, actually I would like to move around and then talk to you because that feels more comfortable for me, if you all agree. Yes, please. Now, moving ahead, Section 7 of the IGST Act defines what is interstate trade and it says supply of goods imported into the territory of India till they cross the custom frontiers of India shall be treated as supply of goods in the course of interstate trade of commerce. Now here, one important thing you must mark is, in the first draft as well as in the second draft, the words used were supply of goods in the course of import. Suddenly in the final draft, in the course, all along the VAT laws, initially as well as subsequent amendments, always with respect to import as well as export, the words were succinctly used as in the course of. And when you say in the course of, it designates that there can be more than one. And when you say imported into the territory of India, it means only once. That aspect is going to have a lot of bearing when we interpret whether a particular type of transaction will be taxable or will not be taxable. Per contra, because imports have been treated as IGST. Now, why imports and exports are always kept under the central enactment? Why it is always that the union has the power? We will come to that. The union derives that power from the constitution and there is a purpose for it. Now, therefore, because all types of imports are compulsorily treated as IGST, in section 8, which defines intrastate, it says that it will not include imports because it is treated as interstate. Then moving ahead, slide ahead. Okay. Place of supply. Place of supply, clause A reads, imported into India shall be the location of the importer. Now, so far, the importer, that India shall be the location of the importer. Now, this is very important. Location of the importer. This term will be interpreted because it is possible that a party in Gujarat imports goods at JNPT port. A person in Maharashtra, for whatever reason, may want to import goods at Chennai port. In such situations, what will be the place of provision and how will be the taxation levied? That is going to be an interesting aspect, and therefore it assumes a lot of importance to say location of the importer. Then, once having imported the goods, the point of time when the taxation will take place, we all agreed and learned in the definition that it is going to be levied under IGST because all imports are IGST. If all imports are IGST, then the tax will also have to be levied under the IGST Act. When you go to the charging section or the levy section of section 5 of the IGST Act, you have a provision which reads that provided that IGST on imported goods shall be levied and collected in accordance with the provisions of section 3 of the Customs Tariff Act on the whole of the value determined under the said act at a point when duties of customs are levied on goods under section 12 of the Customs Act. Now, this means that whenever your ascertainment of custom duty will take place, that is the point of time you will pay IGST on the value which is determined under the customs. So whatever customs law, customs valuation happens of your goods, on those goods you will be levied what is known as RRCs. So now simplistically put, currently we have the basic custom duty, the countervailing duty and the special additional duty. You all know that countervailing duty is in lieu of the excise duty, because had these goods been manufactured in India, there would have been a levy of excise. Because you are importing it, the government is not getting excise, though that's why it is levying CVD. And similarly, there would have been a sale, then it would be a sales tax, and instead of that you have a special additional duty. Now under the new law, you have GST, basic custom duty and IGST. Now because of this, and this IGST is drawn from the amendment in the Customs Tariff Act in section 3(7), which says over and above the tax, IGST will be levied at such rate not exceeding 40% under section 5. So maximum rate is 40% under IGST. So whatever is the rate applicable to the goods, on those goods when you import, after the valuation of the customs, whatever is the custom duty payable, on that you will also be paying IGST. Now so far so good. Now let us move on to the basic issue. Why per se it is always that the center has the power to, or center always takes the power to tax imports and exports. Now Indian definition is there. Now if you read, actually in the first session Naresh Bhai explained the definition in 4 parts to say that includes territorial waters, continental shelf, exclusive economic zone, maritime zone, etc. etc. Now all this is defined under Maritime Zones Act 1976. This is very important because Maritime Zone 1976 was formed because of a section of a constitution 297, and because of the 40th amendment in 1976 of the Article 297, the Act of Maritime Zones Act was formed. And how and in which way it has evolved and it affects the imports and exports will come to it. Now of course continental shelf airspace, this is India, this definition is very important because the general perception, our understanding is, when you read territorial waters, continental shelf, exclusive economic zone and any other maritime zone, the idea is that India includes all this. That means any supply which is in India, even if it is in continental shelf, then that supply will be chargeable to tax. Now this per se of our understanding is not absolutely correct. There are some misnomers when you say that whatever supply you make to continental shelf, exclusive economic zone or maritime zone, then on that supply tax will be paid. How will it come to it? Okay, so you have Article 297. Now this Article 297 was amended in 1976 and it stipulates that all lands, minerals and other things of value underlying the ocean within territorial waters or continental shelf or exclusive economic zone of India rest in union and be held for the purpose of union. Now this compulsorily necessitates that it is the union government which has the power to levy the tax, and therefore that power per se cannot be delegated. Now going ahead, the continental shelf is an area where Union of India exercises limited sovereignty. Now this is very, very important. See, you are saying that it is within India. Fine, it is within India only to the limited extent of exploration of minerals, etc. Otherwise, that area does not territorially or complete sovereign rights in that continental shelf is not of India. It has all the power to tax it, it has the power to exploit it. But those powers are limited powers to do a particular thing only. How this will affect our taxes, we will come to it a bit later. Now, this is one more thing. Under the Maritime Zone Act, you have section 6, subsection 5, which says the central government is empowered by way of notification in official gazette to declare any area of the continental shelf as designated. Now, this is a necessity of law. If you want to tax or if you want to do anything in the continental area, then that continental area has to be designated, defined as designated area. It has to be notified as designated area. Now when you define or designate it as notified area, then, only then, the central government may make provisions as it may be necessary inter alia with respect to customs and other fiscal matters in relation to such designated area. So unless and until a notification is passed by the central government, the taxation within this zone is not available or cannot be done legally. Reading with Maritime Zones Act. That is the reason that in each of the year after 1976, a notification was issued extending the designated areas in continental shelf and exclusive economic zones to the respective enactments. Which means, now in 1996, the Customs Act was made applicable to the designated area. In 87, Central Excise Act. March 83, Income Tax Act. We have income tax experts over here. Section 252A was amended in July, and the Central Excise Act and the Customs Act is going to continue. Central Excise Act, Service Tax Act are going to be abolished. Once they are abolished, under the GST Act, unless and until a notification is issued for the designated area, the union cannot tax the transaction of GST within the designated area. Now this is supported by more than one case laws. We will come to it a little later. Whenever you think of import, you think of ICCs. Because, see, most of the topics of books which are given to me with an eye because existing there are a lot of exemptions available. Whether those exemptions will continue to remain available under the GST, that is the purpose of giving or taking these topics. Because per se, there is a lot of ambiguity with respect to whether a particular transaction of this nature will be taxable or will not be taxable. And high seas is one particular area where a lot of people have a lot of concerns. We had Sunil Bhai, who was here, and Sunil Bhai gave a view that because you are reading the provision of section 5, which says that the tax will be payable only when the custom duty is ascertained, right? Therefore, all the transactions prior to the ascertainment or filing of your bill of entry will not be subjected to tax, but finally, the last person who clears the goods from the customs will be subjected to levy of tax. Now, this view, how far it is correct, whether it is absolutely valid, and how or where and what are the hitches which will happen in following this analogy. Let us now consider, you all know now, I don't need to say that currently we have two sub-clauses of section 5.2, where if the sale occasions the movement of goods. See, certain times what happens that I am interested in buying something from the foreign country, but I am an individual that fellow will not recognize me. So I go through an intending agent who will inform that person that this is a person and a gentleman who wants to buy things from you, and I will open an LC, right, and in favor of that foreign party, and that intending agent is only an agent for the purpose of, allowing me to import from it. There is an inextricable link. The movement of the import has happened because I placed an order in India. And therefore, because there is an inextricable link, such transactions were not taxable. Of course, you have to prove inextricable link, etc., etc. A lot of litigation has happened over a period of years. Second transaction was that you have normally imported the goods. And having imported, before you clear, you don't have capital for whatever reason, you want to dispose of the goods as early as possible. And you have the details of the goods, and you find out a customer who is interested in those goods, and when the goods are on high seas, when the goods are moving from, let us say, Dubai to India, at that point of time, you transfer by way of document of title to the goods while the goods are on movement from one country to another. That is the second manner in which transfer of document of title which can take place. Now in this case, these are the two types which used to be exempt under 5. The first type can never be exempt now because of the GST law. Because if you are placing an order with somebody Okay, and then somebody, when it comes, he will also charge you tax, and it will be a tax neutral situation, and therefore there is no question of exemption. So the only issue of exemption will arise when there is a transfer of document of title to the goods while the goods are moving from Dubai to India, like this. And at that point of time, you have transferred these goods. Let us move ahead and take three situations. There is a reason for taking these three situations. Okay? The three situations would be M of Mumbai imports from D of Dubai and sells it on high seas to K of Colombo. Now, when did he sell? See, high seas means Dubai, say the journey started and it is coming till the port of JNPT, let us say. So, in between, at any point of time he can transfer. Okay? For our purposes over here, and there is a reason for doing that, we have taken three situations. First situation, that the transfer has happened before the ship is beyond 200 nautical miles. See, 200 nautical miles is the area of India, beyond which it is no man's land. It is not Indian territory. Okay? So one is the situation where the transfer takes place, which is outside Indian territory. Second is the situation where it is beyond 12 nautical miles of the coastline, but within 200 nautical miles. That means 212, 200 because it is beyond, 12 because till 12 there is a definition of territorial waters. And that definition of territorial waters, section 3(2) of the Maritime Zone Act, defines that the boundary of India is 12 nautical miles. Right? And then you have the continental shelf and the economic exploration zone. So there are three sets which go. So the first 12 nautical miles, everything is ours. Then subject to conditions. And then nothing is ours. You know, it is like that. So therefore, we have bifurcated this into three transactions. Let us take a situation, first situation. In the first situation, transfer of document to title happens when the ship is beyond 200 nautical miles from the coastline. Now, first foremost question is, when you are bringing the goods from outside the country, okay, the term used is supply of goods imported into the territory of India. In the previous model law, the words used were in the course of import into the territory of India. That means, in the previous model law, they envisaged that there could be more than one transaction before the finally goods land. And because of that envisages, there was a clear view that high sea sales would not be taxable. But now, when you say supply of goods imported into the territory of India, there can be only one importer. Even under the customs law, right, they will recognize only one importer. You may be simultaneously liable for some other clauses, but per se, there is only one person who is known to be an importer for the purpose of customs. Recently, the customs law was amended because, let us say, Mahendra Bhai has an IC code, okay, and Harish Bhai wants to import. Harish Bhai doesn't have an IC code. So, Harish Bhai and Mahendra Bhai are friends. Harish Bhai says, I will import on your IC code. He imports. Harish Bhai did some joljan, customs seized the goods, okay, and issued summons, confiscated the goods and everything. Now this whole thing happened on Mahendra Bhai. So Mahendra Bhai gave a statement that I don't know anything, I have not done anything, you don't catch me. Everything was done by Harish Bhai. But the law says we can't catch him because you are the IC code, you are the importer. Therefore, in this project, the law was amended to say that where somebody has used your, then he will be deemed to be also an importer, and all things which can be done on you will also be done on Harish Bhai. In such a situation, therefore, it is very important to ascertain who is the importer for the purpose of customs. And therefore, they have said that only one transaction, import into India. Now in this case, whether this sort of a transaction, firstly, how will you determine whether it is beyond 200 nautical miles, within 200 or 12? Yes? See, we are in India. If you want any exemption, it is your duty to prove. There is very good GPS system Everything is there. If the moment the ship leaves Dubai port, you enter into a high sea sales agreement, and then that high sea sales agreement is submitted to the customs authority. Then at that point of time, when you are submitting to the customs authority, I'm sorry, I don't know whether everybody knows the procedure. When you enter into a high sea sales agreement, the customs law recognizes this sort of a transaction, and the customs law requires that there has to be a high sea sales agreement on a stamp paper, and that agreement will be deposited with the customs people, and therefore, supposing the goods have been sold on high seas by Mahindra to Harish Bhai, then Mahindra will file with the customs department that Harish Bhai is now the exporter, he will do all the formalities, he will clear the goods, this is the agreement between me and him, and this is the price at which I have sold them to Harish Bhai. Now this agreement remains with the customs authority. Harish Bhai will file as soon as there is an import manifest, Harish Bhai will file the bill of entry and clear the goods, etc., etc., everything he will do. So there is a process, and all this legal documentation, etc., has to be done. Now, therefore, coming back to our question, whether it will be taxable when it is beyond 200 nautical miles, yes or no? What do you think? No. Why no?
Certain limit of the mile.
Beyond 200 nautical miles. So, the Indian government does not have a right to tax such transactions. Presuming also it is taxable, going by Sunil Bhai's theory that the tax, the IGST, can be levied only when the custom duty is levied, when Harish Bhai clears the goods at the port, that is the point of time when he will pay IGST. Right? The custom people already have the high sea sales documentation. What is the price at which you have purchased is known. Right? On that he will levy custom duty. Right? And then you will pay the IGST. Right? Now, if it is between 12 nautical miles and 200 nautical miles, what will be the situation? Whether taxable or not taxable? Yes? No? Why not? It is within 200 kilometers, 200 nautical miles, and India is defined to say that it includes 200 nautical miles, up to 200 miles, 200 nautical miles, India has a territory. So why it should be exempt? Is it not a supply? Yes? It is not a? So why it should not be applicable? It is a transaction of supply? Okay. So otherwise, so supposing tomorrow the notification comes along with the appointed date that everything, whatever happens in the continental shelf, that supply will also be taxable. Then it will become taxable? You are saying, because initially when we discussed India, the view was given that unless and until those continental shelf becomes designated area by your issue of notification under the maritime zone, no tax can be levied. Okay? We presume that okay, on the appointed day the notification comes. Then whether you levy? Then whether it is leviable?
But do they have the powers under the constitution?
By issuance of notification, yes. No.
Tax each and every transaction within 200 nautical miles.
See, when you issue a notification stating that entire continental shelf will be applicable to the goods and service tax law, then everything which is covered under the goods and service tax law will become subject to the same law, as if it is India, as if it is a landmass. Then in that case, it would be subjected to tax. Okay. Before we go ahead, there is a section 9A and 9B under the IGST Act. It says where the place of supply is in the territorial waters, the place of supply shall, for the purpose of this act, be deemed to be the coastal state or union territory where the nearest point of appropriate baseline is given. Okay? Now, in this question, there is a purposeful reason why we have kept this, is because we are saying that it is not in territorial waters. It is beyond 12 nautical miles. Territorial waters jurisdiction is 12 nautical miles. Once it is beyond 12 nautical miles, therefore, this clause 9b is not applicable to us. Once that is not applicable to us, right? If it is taxable as IGST, because under the IGST law they made it very clear that all transactions of import are IGST. Right? It is a transaction of import, it will continue to remain as a transaction of import. Even if you say ICs, the goods are imported from outside another country into India, therefore it will continue to remain as import. Therefore, provision 215 only will apply. Right? And therefore, even if it is taxable, currently the view is that there is a supply of goods within the territory of India. Why tax should not be levied? Only because under sort of a reverse charge mechanism where the person who actually clears the goods will be liable to pay the tax. Okay? Whether there will be variations, what will happen to my profit, whether on my profit which I have sold to another person on ICs will be covered or not, we will take those situations one by one. But as of now, presuming everything is correct. Yes, sir?
Does that mean that until a person clears the goods,
yeah, until the person clears the goods, there can be ICCs. That is always the position even today. So, till the goods clear the custom frontiers of India. And when do you say the goods have cleared the custom frontiers of India? When the goods merges into the local mass, when the determination of custom duty happens at the port, that is the point of time when the goods have cleared the custom station. Till that point of time, it was known to be a course of import, because originally, as of today, we understand that the course of import continues till the determination of custom duty happens. Till that point in time, there is a import happening. It continues to remain. Now, imported into India means till the custom duty is determined. When the custom duty is determined, it is imported into India. Till that time, it is not imported. This is the logic what we draw out of the wordings which we are interpreting. So, irrespective of the answer, if we say, see, legally there is a levy, there are two people, there is a supply of goods, there is an underlying transfer of property in those goods, and that supply is within the territory of India. Okay? Presuming that there is a notification, of course. In that case, even if that high C sales is taxable, the tax will be payable only when it is taken. Okay? Because we are going by the proposition that section 5 provision says that IGST will be payable only when the custom duty is levied. So like excise, the tax is on manufacture, but the excise duty is payable at the point of time when the goods are removed. Here, the tax or the levy is on supply, but the tax is payable when the customs people clear the goods. Now coming to the third scenario. Transfer of document to title happens when the ship is within 12 nautical miles. Now this is territorial waters. Everybody agrees with this? Once this is within 12 nautical miles, then section 9 of the IGST Act is there. Please read this section 9 very carefully. That is the point of time where I am going to say, or this is the place where I am going to say that up till now whatever I have said can be undone by this section. Okay? So please read, notwithstanding anything contained in this Act. Now this is very important. It has a non-obstinate clause. When you have a non-obstinate clause, whatever is stated in section 5, whatever is stated in section 7, whatever is stated in section 11 of the IGST Act gets overruled. And this section prevails. Right? So what does the section say? Notwithstanding anything contained in this Act, where the location of the supplier is in territorial waters, the location of such supplier, or we have the relevant portion of B, because we are concerned with B, where the place of supply is in the territorial waters. Okay? Now, let us take the old example where I gave you that Mahendra Bhai is selling to Harish Bhai. Okay? When the sale happened by way of transfer of document of title to the goods, the place of supply is where? In the sea. Correct? And and this confirms it. This is in the territorial water. Okay? So when the transfer of document of title happened, the place of supply is the territorial waters. Because the place of supply is in territorial waters, the place of supply shall, for the purpose of this act, be deemed to be in the coastal state or union territory where the nearest point of appropriate baseline. What does it mean? Supposing the goods are landed or going to land at JNPT port, which is in Maharashtra. Okay? Mahendrabad is also in Maharashtra. Harishbhai also in Maharashtra. Mahendrabad is sold on high seas to Harishbhai. That time the goods were in territorial waters. Okay? At that point of time, okay, well, the nearest baseline is Maharashtra. Therefore, the place of provision of this supply is Maharashtra. Now, you have all studied place of provision of service routes or place of supply routes. Okay? If the place of supply is in Maharashtra, what is the tax which you are going to pay? CGST. But you just read that all imports will be IGST. So how do you deal with this dilemma? This is the dilemma of high seas, where any place of supply 11A says imported into India shall be the location of the importer. Section 9 says, notwithstanding anything contained in this act, where the location of the supplier is in territorial waters, the location of sub-supplier, or where the place of supply is in territorial waters, the place of supply shall, for the purpose of this act, be deemed to be in the coastal state or union territory where the nearest appropriate baseline is located. Now, which one will prevail? Yes, you have two place of supply routes. Two sections applies to this particular IC sales transaction. Which one would prevail? Yes? 9 or 11? This is going to be 9/11 of the GST law. If you say that section 9 will prevail, obviously it will prevail because it has a non-obstinate clause. Now, there is clearly a contradiction in the two sections of the same act. And because this starts with non-obstinate clause, this is going to prevail. Now, if this prevails, how will Mahendrabhai levy CGST, SGST on Harishbhai? Because the customs is under a different law. Under the customs law, section 3(7) we just read, right, in the third slide, that section 3(7) says that whenever the custom duty is asserted, along with that, at a rate not exceeding 40%, IGST will be levied. So the custom fellow will levy IGST. Who will levy CGST, SGST? Is Mahendrabhai supposed to levy? Presuming, see, Mahendrabhai has to follow the law. Whether he will follow 11 or whether he will follow 9. Now, you see, he doesn't follow anything because he has put on everything to Harishbhai. Harishbhai no problem, where problem nahi. But the point is that this contradiction cannot be solved. Why it cannot be solved? Because this is a central enactment. Whenever you have two laws, where one is the central law, please correct me, there are lawyers over here. One is the central law and one is the state law. And if there is a contradiction between the two, the central law will prevail? Yes, sir? If that is the so, the IGST will prevail. If IGST prevails, custom law is also central act. That also says IGST should be levied. So that will also prevail. So this gentleman will pay IGST only. Now the state government will try and recover CGST, SGST from Mahendrabhai. Because he will say that your supply is within territorial waters. And the nearest coastline is Maharashtra. So you pay me CGST, SGST. This dilemma squarely needs to be addressed only by way of clarification, notification, or by any other means. Apparently. See, you will all, probably each one of you all know that suddenly in one of the meetings of GST Council, they said that the state should be entitled to levy tax within 12 nautical miles. And because of that decision, you have this section 9. See, the section 9 is a villain of the whole IGST enactment. This is not all. We are just talking about imports as of now. Let us move a step further. Let us take this to a logical conclusion. What will be the logical conclusion? Is, let us say a ship has landed in JNPT port. It is docked in the waters only, because huge ships are there. They don't go near the port. They are docked in the sea. But it is certainly within 12 nautical miles, right? If it is within 12 nautical miles, let us say that ship needs repairs, that ship needs supplies, that ship needs various other things. Now what will happen is that the steamer agent, okay, will place an order. Let us say steamer agent places an order on Deepak Bhai. Deepak Bhai is supposed to supply to the ship. He is supplying it in territorial water. Mind you all have done place of provision of supply rules. Section 12 nowhere says there is a performance-based rule. Current place of provision, there is a performance-based rule. But section 12, there is no place of performance of rules. This is a sort of place of performance rules. In international, in 13.3a, there is place of performance. Okay, wherever you are making the goods available, etc., etc. But the same thing is not there as far as section 12 of the IGST is concerned, which is pertaining to where the service provider as well as service recipient is in India. Right? Now, by this clause, this will be a performance-based clause. Okay? Now, because you are supplying over here, you will be charging CGST, SGST to the steamer agent. The steamer agent will also be charging CGST, SGST to his, because the place of supply is this. Now, by this, what will happen is, the whole credit chain will have to be relooked again. Because otherwise, all transactions which is beyond the port, you normally have an IGS. Because that is the power of the union government. By putting this clause, what has happened is that each state government, whichever has the port, of course, then only will have 12 nautical miles. Okay, landlocked states will not have the benefit. Will get additional revenue by way of this. Now, this will create contradictions also, because when you apply section 12 and then you have to disregard section 12 merely because the place of supply is territorial waters. Okay. Now, this is going to create a lot of problems, and therefore let us see how the law unfolds and how we are able to deal with this particular situations. Okay, now there was a concern that okay, if IC sales is not, currently you will understand that today if I make a IC sales, let us say I make a IC sales to Sharmani. Now the VAT department says that no, I don't know. Then what will happen if I bought the goods for 60 lakhs, okay, and I have sold it for 70 lakhs to him? In that case, the VAT department will not only assess 70 lakhs plus the custom duty payable on it, plus the clearing and forwarding charges 2% or 3% उसके मन में जो आएगा वो लगाएगा, because he will calculate on the landed cost, because he will say that it is deemed that when I sold to Sharma ji, I first took the delivery. Why is saying that? Because he is not accepting my IC sales transaction. Once he does not accept my IC sales transaction, he will say that I have cleared the goods. So whatever charges I have to pay to clear the goods, that will be my cost. Over and above, there will be a margin, and then I have sold it to Sharma. So my value will get enhanced for the purpose of payment of tax. In this case, under the GST law also, you have section 231, which is consideration. You also have provision to section 20. This provision to section 20 clearly states that all taxes other than CGST, SGST and IGST will form part of price of your consideration, which in turn means that the custom duty paid by Sharma ji or custom duty paid by Paresh Bhai when imported from here will also be part of the valuation for the purpose of levy of IGST. Both are similar. There can be one problem area, one more problem area. Everything is a problem area over here. One more problem area, that if the customer does not agree with the department, whatever I have put in as a bill of entry, He says your value is not 60 lakhs, it is 1 crore. Now what will happen? He will have to pay tax on 1 crore. Okay? And if the IC sales is not around, then even the person who sold it on IC sales will also have to pay tax on 1. Now what will happen is here, why the problem arises is because first you have section 9. If that IC sales is not allowed, then 2 times the taxes are paid. Both are paid on inward supply. See, although Mahindra Bhai, when he says to Harish Bhai, it is an outward supply, right? When he says to Harish Bhai cannot take credit of that because the goods have not come to him. When will the goods come to him? When he clears the custom duty. When he clears the custom duty, again the GST will be payable by. So on the same set of goods, he will be liable to pay twice, which cannot be a situation. Which is not viable, which is not legal. Therefore, there has to be a mechanism. There has to be a mechanism. Till beyond 12 nautical miles, everything can function. If Mahindra Bhai is selling to me when the ship is at 100 nautical miles, fine. Okay, no issue. I can show it as that I am supposed to pay the reverse charge mechanism. Not an issue. Okay, whoever clears the goods will pay. But when you are in territorial waters, because section 9 takes over, and because of the non-obscenity clause of section 9, the entire chain gets broken, and there is an issue whether IGST will be payable or CGST. We can't tell to the state government that you go and fight with the central government, I have paid IGST. Because he will start issuing notices on you. So, therefore, there needs some clarification. Because of this section 9, especially, and believe me, 95% or rather more of the IC sales happen within 12 nautical miles. Admittedly, if it is going to be taxable, there will be lesser amount of IC sales which will happen. There is no doubt about it. But the fact continues to remain, okay, that this IC sales, if it is not addressed, is going to become a problem. Let's move a bit quickly because we are in the first topic and it is already 4 o'clock. We had initially learned that place of supply is the place of the importer. Okay? So let us take a few transactions. Say G of Gujarat brings goods at JNPT Maharashtra and he is not registered in Maharashtra. Whether he can pay IGST on the Gujarat registration? Yes or no? Are you sleeping? I feel like singing. Are you sleeping?
Yes.
How come you answer then? Okay. Even if you are, see, IGST, you can be registered anywhere. Right? You can be in Maharashtra, you can be in Gujarat also. If you are registered in Gujarat, when you are importing at Maharashtra, you will give your IGST number of Gujarat and you will clear the goods. Should not be an issue. But the next will create an issue. If the above, he will take the goods to Gujarat compulsory. He should. Because he is not registered in Maharashtra. The bill of entry mentions his address as Gujarat. He can give Gujarat IGST, but he will have to carry the goods to Gujarat. Okay? Supposing he does not, he delivers the goods to his job worker in Maharashtra. Okay? Then what happens? If he is not registered in Maharashtra, right, first he has to inform 143. Yesterday only they learned. 143 he has to inform the commissioner. If the commissioner accepts, he can give. No issue. But if the commissioner is not given, then there is going to be an issue. Because the value of those goods needs to be transferred in the state of Maharashtra. Otherwise, the goods have not been in the... See, for taking credit, you have a compulsory that the goods have been received by you. When the goods have not been received in Gujarat, can you say, tomorrow the officer is going to say, I will not give you IGST credit because the goods have not come to Gujarat. Have you received the goods? Okay. That challenge can be addressed. But if the permission is taken, he will be entitled to give it to a delivery to a job. Okay? If he is registered in Maharashtra and Gujarat, okay? One more situation. And the address of Gujarat head office is given on the bill of entry. Can he book it in the state of Maharashtra and proceed to supply? Yes or no? Yes or no? No. What will happen if he does that? No? See, he can do that, but in that case, he will have to issue an outward supply to his branch in Maharashtra with the taxes. Okay, that will be the inward supply of the Maharashtra branch, and then Maharashtra branch can supply. So the same transaction rolling over 3 times. Now you know how the GDP is going to grow once or twice, 2%. This is the way. Each person, every time you say to somebody, there's a supply, there's a tax. Okay, so the chain goes on. So each transaction rolls over 3 times. Okay, and let's move ahead. There is one transition provision which is only for the purpose of services. Now, you are all aware that goods are tangible. So the day the appointed day is there, prior to that, if the goods have cleared the customs station, in the sense that the determination of the custom duty has happened, then there is no question. If they have not happened, then it will happen under the new law. Okay? But as far as services are concerned, there needs to be a transition provision. And so in section 21, you have a transition provision. This says that whenever an invoice relating to supply or payment in part or full is received or made prior to the appointed date, the transaction will be deemed to be initiated prior to the appointed date. And if you have paid some part, then the balance part will be payable under the GST. And if you have not paid anything, then the whole thing will be payable under the GST. Very simple, not an issue over here. Let's move on to exports and deemed exports. Exports of goods, taking out of the goods to a place outside India is very important, because we will come to it that when you supply to ONGC, whether oil rig for that matter, whether it is in India or not, that was an issue which there was a debate on under the VAT law. We'll deal with that. Export of services means, now this is very important because they have defined export of services, and this definition is cumulative. Even if one of the conditions of this is not there, it means that you will end up paying IGST although you have provided services outside India. Otherwise, for all logical understanding of the term, you will say that I have exported the service, but you will still end up paying IGST in India. The first thing is the supplier of service is located in India, the recipient of service is located outside India, place of supplier of services outside India, and the payment for such service has been received by the supplier of service in convertible foreign exchange. Okay? And the two are not distinct persons, that means head office and branch is not there, then this is going to be happening. Okay. Interstate supply, place of supply for export is also outside India. Okay. Sunil Bhai has already done international place of supply for services. Okay. You have dealt all with, so we'll skip this because this is something bad. Now, this is very important. Today, when you go abroad and you buy something in Paris and you have a bill, and when you are at the airport and you show that bill, they give you the refund of the tax. Similar provisions are sought to be made in India. How far it will go? Only time will say. But yes, that is good thinking, and we should respect it because now we are getting a lot of tourists. So, there is a provision that says supplies made to a tourist referred in section 15 shall not be treated as intrastate supply. It will be treated as interstate supply. When you will have to take precaution and care. Either you suo motu will ask that person, that boss, are you tourist? Give me your passport. If you are willing to give me your passport, I will have your tax, which you can claim a refund. Okay? Because if you levy intrastate, that means CGST and SGST, then you are not going to get it. Only if you levy IGST, the central government will give you refund. So that care has to be taken. And what is the meaning of a tourist means? A person not normally resident in India who enters India for a stay for not more than 6 months for legitimate non-immigrant purposes. Okay? Okay. This actually, India has come again over here, but there is a great purpose for it. Whether supply made to ONGC rig at Bombay High will be treated as an export. This has been the most litigated area under the VAT laws. Okay? You have two decisions. one of the Bombay High Court in pure India and another of the Gujarat High Court in the LNT's case. Both are exactly opposite. One says it will be taxable, another says it will be exempt. Both have argued in the same manner. And I will tell you what is the difference in the case. In the first case, pure helium's case, oxygen or helium gas was manufactured at Palghar, Thane. It was taken at that port of JNPT or Port Trust, Bombay Port Trust, and from there it was given to ONGC. In another case, some setup was to be made at the oil rig by LNT, and therefore material was to be taken from LNT to ONGC, and there their engineers worked and said that turnkey contract was there, and on that turnkey contract basis they entered. Now, this is a classic case where how and what a lawyer should argue and what is the case which you should put up. In the pure helium case, it was argued that it is not an export, and the Bombay High Court went through various laws and said there is an entry in the Constitution, Article 286, which says that there can be an export provided the goods are exported out of the country, and there can be an import provided the goods are brought into the country. So the question was, what is the definition of India? And in that context, okay, they interpreted our Article 276, which was amended, and they said that way back in 93 or before that, I think, there's a notification issued which says to the designated area the Customs Act is applicable. If the Customs Act is applicable, that means that is a territory of India, and therefore only the Customs Act can be applicable. Because the Customs Act is applicable, because it is a territory where Customs Act is applicable, because also the reason that Excise Act is also applicable, because Excise Act became applicable by way of notification in 1987. That's why it was India only, and therefore you made a supply to India only or within India only, and therefore it is not eligible. Come to LNT's case, Gujarat. That was also a CST transaction. Goods moved from here to ONGC. In the first case also goods moved from here to ONGC. There they argue that the entire transfer of property in the goods have taken place at the Bombay High Rig. Because I am taking the goods over there and I am going to build a rig. There is going to be an engineering work over there. In the order also, they wrote that yes, the property in the goods passes only at the rig. And it was argued that because the property of goods passes only the rig, and he did not argue that it is an export. He said that it is an interstate transaction, that is what the assessing officer levied. And he says section 3A is applicable. 3A says that because due to a reason of sale, when there is movement of goods from one state to another state, then it is section 3A of the CST Act. Right? So they said that this is 3A and there is a movement between one state to another state, and therefore it is taxable. And he made it work. It was argued that, sir, this is under CST Act. Yes, section 3A CST Act. Yes, there is a movement of goods, but there is no two states. Why there is no two states? Because this is under CST Act. Under CST Act, there is no notification that CST Act will become applicable to designated areas. Therefore, for the purpose of CST Act, when you are interpreting CST Act, designated area is only for the purpose of exploration and not for applicability to CST Act, and therefore it is not taxable. So the same thing, the goods certainly went from here to ONGC in both the situations. One argued, one tried to take an exemption. He did not get an exemption. Other charged on the levy itself to say that it is not leviable because there is no two states, and because under the CST law the notification has not been issued, and because the notification has not been issued, therefore, it is not subject to tax. In spite of the decision of the Bombay High Court, in spite of the decision of the tribunal, in spite of all decisions which were against to say that it is not an export, LNT did not pay taxes. Very recent judgment that makes us think that now, coming out of the routine, we have to put our brains to something different and strategizing what to argue and where to argue and why to argue. That probably can, take us somewhere where we want probably. Let's move ahead. Now, see, up till now, what used to happen? Excise Act was a different act. VAT Act was a different act. If you paid excise duty, you could claim excise duty refund. Now there is GST Act. Under the GST Act, in exports, there are two ways of taking in export. Either you will say that I am under a bond clearing goods for exports, and whatever ITC have, you will take. So that apart, that's a separate thing. Now you decide that I am going to levy IGST and claim a refund of that IGST. That is also available. Just as in excise, you levy excise and you claim a refund of that IGST. Now what will happen is, let us say you exported the goods to Tanzania and the payment was to be coming from Dubai. Now when you exported the goods to Tanzania, you let us say levied 10 lakhs of rupees and IGST for the sake of convenience we take 10%, 1 lakh of rupees. Okay? Now this 1 lakh rupees you are going to go and get the refund. Now the Tanzania fellow pleaded, no, the quality is not good, this, that, he complained to the Dubai fellow complained over here. Now he says, I will reject the goods, I don't want, I will not clear it. Then he said, I have a discount here, but if you don't clear the goods, then the whole thing will be on me. So he said, okay, now I will pay you only 7 lakhs. So we agreed. And we agreed to give him a discount and he charged 7 lakhs. Now the amount which is going to come is 7 lakhs. If 7 lakhs is the amount, whether I need to issue a credit note, I have already taken a refund of that 1 lakh. If it was 7 lakh, I was supposed to take a refund of 70,000. Whether this sort of a transaction will affect the refund procedures, because if it would have been a normal transaction, if I had issued a credit note, he would have to reduce the set off and then I will reduce my liability. Correct? Matching concept. In this case, because I am exporting, I am taking a refund of something which I am not going to get money. Yes, you are with me? Yes, sir. You agree or don't agree? Whether you will have to change over and apply for a refund of 70,000 or you will take full refund of 1 lakh, sir. Full refund. Okay. Now, there is a procedure that when you charge that, if you had any import tax credit, you will adjust that, right? And the balance, if it was payable, then you pay. And you give a refund of that whole of the amount. Correct? Now, because it is 70,000, okay, instead of 10,000 refund, okay, the standby credit was not available. There comes to be a 10,000 rupees payable. Now, see, there are two ways. Okay, we'll take this issue again in SEZ. Similar issue, we'll deal with it. Because without the figures, probably you will not be able to correlate. Okay, let's move on. Thank you. He needs a break. I hope you all don't need it just now. Okay, let's move on. Invoicing of an export. See, hitherto, lot of chances were taken. Let us first export the goods, then we will decide. You will show in the return as tax charged, and then claim a refund. Now, when you are clearing the goods for your export, when you make an invoice, there is a provision in the invoice rule which says you will have to write supply meant for export on payment of IGST or supply meant under export bond or letter of undertaking without payment of IGST. all these informations will have to be filled. Now, situation if you are sending the goods to Tanzania and receiving the amount from Dubai, still the goods have gone out of the country, there is no issue on that. This reporting requirement, although the new format has not come in, of course an Ashit Bhai will probably take it, so we'll just keep it, but you must remember that there is a detail of shipping bill or bill of exports. Now, how will you know the shipping bill or the bill of exports when you are removing the goods from your factory? Today, the normal lag period of goods moving out of your godown till the ship leaving is minimum 1 month to 3 months. In certain cases, if you are very high profile guy, maybe 15 days or 20 days. That is also very difficult because you are going by the entire container road, then maybe that is possible. Otherwise, you are at the mercy of the shipping lines, and whenever uska lot taiyar ho jayega, then he will change. How will you come to know at the point of time when you are removing or at the point of time when you are filing your return immediately on the 10th, right? That what is the bill of details of the shipping. Now this will create some problem. Let us hope if they rectify the situation, fine. But never know. Okay? Moving on. Goods are dispatched from Ahmedabad, okay, to be exported. But there is some minor corrections of the work which is to be done by a job worker in Pune. And then he will send it to JLP. Whether the supply made to the Pune person can be treated as in the course of export. No? Yes. That means, yes. Yes, sir, we want another view. What does it say, sir?
This paper has been sent to make him exit.
Yes. And in Kerala, what is gone to Kerala is magazine. Yeah. That case, sir, whether it will be relevant in the current situation, that is the issue. Because here every supply, that was under the interstate movement. And under the interstate movement, it was felt that that state, okay, it is an interstate movement. So ultimately, the movement is going there, either in the form of paper or in the form of magazine. So it was moved to Sivakasi and all that, right? Now, but here we have to look into from the GST angle. From the GST law, every supply is subjected to tax. Can at that point of time you say that it is an interstate movement, therefore it is an export? In such situations, see, practically, these are the things which happen. And that's why these things will create a lot of problem. Because then you will have to either say under 143, you say that it is going to my this, and then from there will be an export. So there will be a whole turnover which will be extra short. For a small work of, let us say, 1 lakh of rupees, the entire container amount of 1 crore of rupees will move from one state to another state, and that's why they say that the GDP is certainly going to grow by 2%. Because it has to grow, because from one state to another state you keep on moving rupees, and 1 crore rupees moves 4 times, so your GDP grows. Anyway. Now, deemed exports, currently we have section 5(3) penultimate sale. Supposing Deepak Bhai has an export order, confirmed export order, and he places that order on me, and I manufacture those goods and give it to Deepak Bhai, then the sale which I make to Deepak Bhai, now supply to Deepak Bhai, will be treated as deemed export. That's the current provision. Okay. Under the GST, they say deemed export means such supplies of goods as may be notified under section 147. Now 147 says government may on recommendation of council notify certain supply as deemed exports where goods supplied do not leave India and the payment to such supply is received either in Indian rupees or in convertible foreign exchange if such goods are manufactured in India. So you have a door open that maybe, or maybe something like the when you are sending for export, before that you are sending to a job worker, that job worker can also be deemed to be your deemed exporter, right? And then that chain can work. So depends. Here the important thing is that they are saying that they will notify supply of goods. So it is not on the person. When we see section 5.3, it is the person who is making the supply. If he is making a supply on the basis of the confirmed purchase order of third party, and if there is an inextricable link between my supply and Deepak export, then it will be an exempt currently, today. But here what they are saying is that the government on the recommendation of COSIC notifies certain supply of goods as deemed export. So the kind of goods may be a deemed exports or not deemed exports. Ultimately the goods have to be exported, that is accepted. So today any kind of goods can be deemed exports. But tomorrow there can be only certain category of goods which will be deemed exports, and not all goods for deemed exports can be possible. So if they notify that okay, the computer can be deemed export, then goods which are being exported, which are computer only, uska hi deemed exports ho sakta hai. In all other cases there can never be a deemed exports, which is not there in the current scenario. Current scenario, whether it is computer, laptop, screen, whatever, if there is a predetermined order, and if pursuant to that predetermined order, if I am supplying the goods, then it is chargeable to tax. I mean, it is exempt from tax. SEZ. Now, section 219 defines SEZ Act as per the Economic Zones Act, etc., etc. This is important. In the course of interstate supply, all transactions taking place in taxable territory of supply of services or goods or both to or by SEZ. That means whether you are supplying to SEZ or whether SEZ supplies to you, that transaction will compulsorily be treated as IGST, because you are going to levy only IGST. It is deemed to be an export zone and they want to deal with it as if it is an export transaction only. Therefore, what they are saying is it is going to be an IGST transaction. Per contra, they are also saying that interstate supply will not be chargeable. Intrastate supplies will not be chargeable on such transactions when any transaction is made with SEZ or SEZ makes any transaction with anybody else. Now, section 16, of course it has amended a lot after it came in the last draft. 16.1 says zero rated supply. Zero rated supplies are exports or supply of goods or both to an SEZ developer or an SEZ. Now, mark the difference. When it came to IGST, it says whether you make a supply to SEZ or whether SEZ makes a supply to you, it will be treated as IGST. When it comes to zero rated, okay, in zero rated they say that only if you are making a supply to SEZ, then it is zero rated. Okay, if SEZ is making a supply, it may or may not be zero rated. Why? Because SEZ, under the SEZ law, is entitled to sell at least 20% of his production or services within the domestic tariff area. Therefore, when it sells within the domestic tariff area, it will not be treated as zero rated. He will charge IGST, although that person may be in Maharashtra. So we will take those situations when we move ahead. Okay? Now, clause 2 of 16 is very, very important. When you are making a supply to an SEZ, you are not charging any tax. When you don't charge any tax on the outward supply, the question is whether you will be allowed the entire input. Okay? They have clarified that when you make a supply to an SEZ, your inputs will be allowed. Subject to 75. 75 is a negative list. Your cars, etc., which Harsh. Okay? That is a negative list. It will be allowed. But one important thing you must mark, which says that credit of input tax may be availed for making zero rated supply, notwithstanding that such supply may be an exempt supply. Now, people who are practicing in that, they know there is a rule 53 2A and 2B, which says that cloth is exempt. Okay? And if you are manufacturing cloth and you are also manufacturing something else, so which is taxable, then the input tax which goes into it, you should be allowed proportionate. Okay? But while taking that proportionate, if you have exported that cloth then that turnover should not be taken as exempt for taking out the proportion. You are with me? Whenever you are making an exempt supply, and if that exempt supply is exported, then that exempt supply will not be taken for the purpose of taking out ratio for exempted taxable supplies. This is restricted only to SEZ. Please, there are exceptions. Now, previously also we always had exceptions. Actually, unfortunately, all the exceptional items have been given to me. So here also in every section there is going to be an exception. Okay? So, when you are making a supply to an SEZ, if that supply is an exempt supply, when you are taking out ratio at your end for input tax credit, that exempt supply should be treated as taxable supply and not exempt supply for the purpose of ratio. Okay? Moving ahead. If a registered taxable person sells to an SEZ, okay, no IGST, he will take the refund of the ITC. If he charges IGST, he will get the refund of IGST. Okay? A SEZ sells to another SEZ, okay, no IGST, then he will take the refund of input tax credit if at all it is there. If it is IGST charge, he will take a refund. SEZ does an export transaction, same options. He will either charge a IGST and take a refund or take the refund of IGST. SEZ purchases from an unregistered dealer, he will be liable to be taxed. But if he exports those goods, he will get a refund. Okay? But if he does not export or he sells it in within domestic tariff, that will be a cost to him. So he will have to pay purchase tax, as we call reverse charge mechanism. Yeah? SEZ sells to a registered taxable person. Now this registered taxable person can be, registered taxable person is domestic tariff area. If he is selling to a registered taxable person, it can be either in Maharashtra or outside Maharashtra, presuming SEZ in Maharashtra. Okay? In both the situation, he will levy IGST because all transactions done by SEZ will be covered under IGST. Now, if IGST, SEZ imports any goods, then there is no exemption unless the custom law gives an exemption. As of today, if you are an SEZ and if you import yourself for your purposes, then you will pay custom duty as well as IGST. Maybe another custom duty there is an exemption for SEZ, but for IGST as of today there is no exemption and therefore it will be leviable. Similarly for services, if it imports any services, then under the reverse charge mechanism it will be liable to pay. Now this is a very peculiar situation. Let us say a registered taxable person supplies to an SEZ. He will charge IGST, then 100 plus 20 will become 120. The registered taxable person will take a refund of 20. This he will supply to an SEZ. SEZ fellow will export. He will export with IGST. Then 150 plus 30. That 30 rupees he will get an refund because he has charged IGST. But to the government, he will pay 30 minus 20, that is 10 rupees. Because he has charged IGST, whatever set-off was available, that set-off he will take and the balance will become payable at rupees 10 rupees under his return. And whatever is exported, he will get a refund. Now please understand, this is a very peculiar situation, but this is something which the government wants. Today what is happening is, if you have a unit in Jammu and Kashmir, okay, then what you do is, you pay excise duty over there. Immediately on payment of excise duty, the same amount is allowed to you as rebate. So you will, there is a rolling credit. Whatever, so you have to pay first and then you get a refund of that. Okay? That because you have charged, you have sold it to a unit in Maharashtra. That unit in Maharashtra will take a Senvat credit off. Then that Senvat credit he will get, he will export it. He will take a refund of that Senvat credit also. So the tax which is already taken as refund in Jammu and Kashmir is taken as Senvat credit in Maharashtra and it is taking refund also of that when it is exported. This is a scheme which is accepted by the government. There was a repetition, excise duty was charged, there was rates, and by a third member bench in Jindal Drugs, such a situation has been an accepted proposition. And therefore, that's why after that decision, they have reduced the credit from 100 to 75. Which is also challenged in the court to say that you can't do it because you had agreed. That's why we have put up the plan. Okay? So, estoppel, promissory estoppel of the government. So, what I am trying to say is that this sort of a transaction is possible and therefore, you may feel that there is a double refund. But that's not, that's the policy of the government. Because they are wanting to give you export benefits. This is relating to exempt supplies. We've already discussed that. We are running pretty short of time, so we move ahead. Okay. TDS is the... See, hitherto Mahindra was speaking only about income tax TDS. Down the line in 2 years, he will be a master of TDS where he will speak on TDS of GST as well as income. So TDS as a whole. And then you will not have to find two speakers. You will have only one speaker and Mahindra will speak on TDS. Let's move ahead. The section says that the government, see, both sections of TDS as well as TCS start with a non-obstinate clause. This is very peculiar, this is very important. Notwithstanding anything contained in any other act. This is very important that TDS section starts with a non-obstinate clause. Notwithstanding anything said in any other section, the government may mandate blah 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 notified category of person to deduct one person from the payment made or credited to supplier of taxable goods, service or both, where the total value of such supply under a contract exceeds 2,50,000. Now please read, total value under a contract exceeds 2,50,000 rupees. We will come to what is the definition in income tax. The provision states that no TDS shall be levied if the transaction is an IGST transaction, although section 20 of the IGST says that whatever is stated in the CGST TDS provision, the same will be applicable over here. But they don't want any TDS to be done as far as IGST transactions are concerned. Therefore, no TDS, in spite of the fact that the provision also applies to IGST. TDS is to be done excluding CGST, SGST, payment within 10 days after the end of the month. TDS certificates to be granted. Failure to give TDS certificate within 5 days of the credit to the government of the amount deducted. If you don't do it in 5 days, of course we have represented from the chamber that this is too harsh. And penalty of rupees 100 per day, maximum to rupees 5,000. Interest under section 15(1) for TDS deducted but not paid. Default for non-deduction to be deducted as amount as per section 73 or 74. Excess TDS default can be dealt with by way of refund. However, no refund if the other person has already got credit in his electronic tax ledger. It seems to be fair. Now the issues. See, the TDS is to be deducted on rupees value of an amount of rupees more than rupees 2,50,000 and under a contract. Okay? What do you mean by the term under a contract? Because in 194C it says aggregate amounts credited or paid. Okay? Let us say I enter into a transaction today, presuming GST is on 5th of July with Deepak Bhai, and I order 2 lakh rupees worth of goods. Again on 10th of August, I ask for again 2 lakhs worth. Again on September, I again order 2 lakhs. Whether you will treat this as wider contract or you will treat each contract is a separate contract and therefore each contract is less than rupees 2,50,000 and therefore no TDS. What is the stand which you will take? Each contract should be less than, more than 250, then only there will be TDS. Each transaction is less than 250 and therefore it will not be taxable. However, tomorrow they can announce everything, they can see it on the screen. They will issue a notice that you have not deducted TDS, you should deduct TDS. Because at my end, or rather in most of the companies, you have a vendor verification program that these are the 3 vendors from which you will buy. and this is the vendor, total purchases will be so much, this total purchases will be bifurcated. All these are MIS reports. Okay, will be bifurcated. No, from no one vendor will buy everything. You will at least keep 3 vendors, and your total purchase is going to be set. So internal, you have decided that these are the 2 people from where I am going to buy. But only for the sake of no TDS, you tell them each time you give him a contract of, or let us say, after 6 months, for whatever reason there is an urgent need, and you place an order of 3 lakhs rupees. Then what will you do? Only on that 3 lakh rupees you will deduct, and on the balance amount which you entered into a transaction you will not deduct TDS. This is going to be a problem. More because under the Income Tax Act you have a provision that if he has paid the tax, if I have paid the tax, the question is only of interest. You will have interest and forget about it. There is a decision of, I think Tata, I don't know. Hindustan. So there is a decision which says that you will not have to pay tax again. But there is no such provision under the GST Act. And if that be the case, right, even that's why if you go a slide back, it says the default of non-deduction to be deducted of amount as per section 73 or 74. Now 73, 74 is show cause notice. One, without fraud, miscreants, etc. And the other one says with fraud, blah 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 blah. So then, because you did not deduct, there was a convenience between the two. Like the VAT department says, because he has not paid tax, you claim the set-off, you are both in conveyance, I'll file an FIR. So similarly, you will say both of you are in conveyance, you did not want to deduct TDS, and therefore I should levy penalty on both. Those provisions are also there. Anyway, so this is an issue which I felt I should draw your attention to. Then the TDS returns, just as you have TDS returns, you have the return of the TDS will have to be filed as per section 39(3) within 10 days from the end of the month. 39(3) says every registered person required to deduct TDS, blah 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 blah, he will do. Now the question is that the TDS return is to be filed as per section 39(3). That section says that whatever credit adjustments you want to do, you have to do it by September return, that is 20th of October, or latest by December when you file your annual return. Whether the same provision will also apply to TDS. Supposing some person did not deduct my TDS and pay, he deducted and did not pay, whatever happened, because he did not have money. And subsequently, after 2 years, he was caught. He said, hey, now I am a rich man, I will pay. But he will not get credit. Why? Because he did not do the adjustment within 15 months, as is required. Because this section of filing the return comes under return. And the same treatment of section 39 will be given. You can't have a separate treatment for the specific reason of TDS. And if you want that, you should have a provision for that. Such a provision is failing. According to me, since it is treated as tax, okay, there cannot be a time limit of 15 months. Right? But this is the law, so we have to, that is an area which we will have to draw our concerns with. Okay? Section 52, e-commerce operator. Not being an agent shall, every e-commerce operator, not being an agent, shall collect an amount not exceeding 1% of the net value of supplies made through him by other suppliers, where the consideration with respect to such supplies is to be collected by the e-commerce operator. Net value means aggregate of supply of goods, services or both, other than 9(5), less aggregate value of taxable supplies returned to the suppliers during this month. Now 9(5) says that the government has the power to notify that certain services, although rendered by me through an aggregator, the Ola services or the Uber services, the Uber or Ola will pay the tax and not the actual rent-a-cab fellow. That such provisions are there. They also is there. So they have taken power under 9(5). Okay, and similarly under 5(5) of the IGST Act. Those powers are taken. So wherever the e-commerce operator is not going to pay tax, but the person who is supplying is going to pay the tax, and if the e-commerce operator is collecting money on your behalf first, then from the payment to be made to that supplier, you will have to deduct collect what is known as TCS. Now the first problem area is going to be there. Of course, within 10 days, blah blah blah, rectification can be done. Now the problem over here is that they are going to match the statement which the e-commerce operator files monthly, that format has not yet come, with the outward supply which each supplier will do through that e-commerce site. Now the problem will be that one-to-one matching will always create a mismatch, because today, let us say that there are 10 transactions of supply and 3 of refund. So on 7 transactions, on the net value of 7 transactions, he will pay 1%. No, but how will he pay 1%? He has to pay 1% of each individual supplier. No, he has said aggregate. But if you do aggregate, the tax, supposing I have done 5 transactions, Mahendra Bhai, Sharma ji, President sir, and one more person. Okay? Now what will happen? All these 5 transactions of, let us say, 50 lakhs of rupees. Okay? And Deepak Bhai and Atul Bhai's refund is there. 5 lakhs rupees. So I will pay TCS on 40 lakhs because aggregate comes to 40. How will I pay on 40 lakhs? Actually, I should pay on all the 5 of you 1%, and on those that should be a minus amount, and then the balance will be. Otherwise, there will not be a matching concept. Matching has to be done 1-to-1. If I pay on net aggregate value, that net aggregate value will not match with my gross figures, because that is A plus B or B minus C, whatever. Okay. So there's going to be a matching issue. Otherwise, TCS provision seems to be okay. Supposing Uber and Ola say they are not notified under 95. Okay, it's a normal e-commerce operator. Then, if you book by a credit card, the e-commerce site is buying. But if I pay cash, the e-commerce site is not collecting. Then, for the same person, if I am paying by credit card, there is a TCS applicable. But if I am paying by cash, TCS is not. Fortunately, maybe they will be covering it as 95 transaction only. But if they don't, then you can have such situation where the same supply, if the supply is made through credit card, it is made through you. If it is made through cash, it is coming in directly to the driver. Of course, there is a scope to argue that he does the entire accounting as if the whole thing has come to him, and then after deducting 1%. But the question is, if you read the language of the law, it says that the amount has to come to the e-commerce operator. And when the amount has not come into the e-commerce operator, can you deem it? So then he becomes an agent. But the first thing the e-commerce site says that if you are not an agent, then only the TCS comes into the picture. If you are an agent, then there is no TCS. Right? So that is going to be an issue of area of concern. Okay? Electronic commerce site. You have this, every electronic commerce operator has to register himself. Register has been left out. These are the definition, not really, you all can read it also. There is this issue of concern in the ocean freight also. What they have done is basically that if you are physically not present in a country, if you are entering some services from outside India, and there is a recipient in India who is not a registered person, then if you are not a registered person, as a recipient you are not going to pay tax, then the government is losing out on those revenue. Every time, so many people download that e-virus, antivirus, free antivirus. So if you are an individual on a mobile, you download an antivirus. Government does not even know kitna antivirus chal raha, kitna the office gaya, right? And you may pay 50 rupees, 100 rupees, sometimes you don't pay us. So if the question is, the government loses out on that. So there they have said that somebody of your representative has to be here. He has to monitor कि कितने downloads हुए, उस download के ऊपर tax भर देना. So that is a provision which they have made. Similar provision is also made under the GST law. Okay. Now the question is, which site you will consider as e-commerce site and which site you will consider as non-e-commerce site. See, because that is the main question. Let us say your dating sites, whether it is an e-commerce site, because it does the work of allowing two people to meet. Matching. Whether it's an e-commerce? Yes or no? Yes, no, maybe. That will depend upon how the pricing structure is, whether the amount is being collected by the e-commerce operator or whether the amounts directly. You have OLX पे बेच दे, whether what is that site? Whether that site is an e-commerce site, it allows you free. You download the pictures. There is an eBay auction site. It says up to 50 items free. After 50 items, you have to pay to the e-commerce eBay, and then you can upload. So when you pay to eBay, whether it becomes an e-commerce site, till that point of time it does not become an e-commerce site. So it will be a big challenge, especially for the .com companies. First, they have to have a relook as to whether you are an e-commerce operator. See, the purpose of e-commerce operator is only for the purpose of identifying whether the TCS is to be done or not. Otherwise, for your revenues, you are going to pay under GST. So that is not an issue. But the issue is going to be that if for some reason you have one of the models where the customer pays you and then you are paying to the other person, then you will be fitting into that e-commerce definition where TCS is necessary, and in that situation, on certain types of transactions, there can be a liability of TCS. So there, for that purpose, the bifurcation is necessary. Now take a simple example that a dress is ordered on 29th of July. The delivery schedule and that dress, let us say, is of X amount, and that X amount has been paid by the credit card in advance. Okay, पहले पैसा ले लिया. Okay, the delivery schedule is of 10 days. On 7th August, the supplier raises the bill and sends the goods. Now you tell me whether what is the point of taxation? What is the point of time when the liability to pay tax arises? Whether the e-commerce site is liable to pay tax or the actual supplier of goods is liable to pay tax. Because admittedly you as a customer has given an advance, okay, but the actual supplier of that dress has not received the advance. It has been received by the e-commerce site, right? Now that e-commerce site is not a supplier as defined, right? So what will happen to the advance? Your amount, although you have paid advance, the tax will probably become payable in the third month. Because, see, 29 July is the day on which you have received the advance. So, 5th August or 10th August was your point of taxation and you should have paid the tax. Okay? But you have paid to e-commerce, you don't do anything. E-commerce वाले ने supplier से 30 days का credit दिया है. So, when supplier sends the dress, he will raise an invoice. The moment he raises an invoice in August, 7th August, then his liability to pay will come in September. So 10 September. So although the amount has been given in advance, the point of taxation differs by 2 months. Okay. Now, if you go back Bandra Valley CV, if from here you are going to Bandra, BKC office, via CV. Okay. And you can move he will include the toll charges. Correct? Now whether for the purpose of toll charges he is a pure agent or whether he will pay on the entire amount collected by him. Actually it's a pure agent, no? No? Because no bifurcation is provided, no actual toll receipt is provided on the entire amount, including the toll amount, probably it seems that it will be liable to pay GST. Okay, now certain times the sites provide you that okay, Amazon tells you that if you want to gift to your near and dear ones, we will do a gift packing, Valentine's Day packing. Superb, and they will charge, they will do a fantastic red heart packing and they will send it to your dear ones. But that packing will cost 5,000 rupees extra for a 1 lakh rupees dress. So 1,25,000. Now, what is the rate of tax? Whether it is mixed supply, composite supply, what will happen if the dress is taxable as ready-made garments as 5% for the sake of presumption, okay? And gift packing is a supply of service, okay? And service is taxable as 18%. So, predominant supply you will say, or it is a mixed supply, therefore on the whole transaction 18%, or on the whole transaction only 5%, or because the bifurcation of value is available, you will say on 1 lakh 5% and on 18, on the packing charges of 25,000, 18. Three options. कौन बनेगा करोड़पति? A, B और C. कौन सबसे ज़्यादा कम टैक्स भरेगा? और none of these. चलो चार ऑप्शन पूरा कर दिया. Yes sir? हाँ? Dominant nature. So dominant nature is the ready-made garment. So 5% on the entire. So सबसे सस्ता टैक्स यही भरेगा. So of course these are all issues which you need to consider, which are going to be coming to you in the course of your deliberations, and that's why I just thought I will draw your attention towards one more issue. There are lots of offers these days. One person is vying with the other for offers. One company for marketing says that 5 दिन में Amazon जितना ready-made garment supply करेगा, सब ready-made के garment के साथ मेरे कंपनी का official napkin free. On every supply for 5 days with ready-made garments, I will give free napkins. Okay, that means, and Amazon का पैसा लेगा because it's marketing. So Amazon will say, okay, I don't mind. Okay, now Amazon tells him that मैं तुमको schedule दे दूँगा, जो मेरा supply करने वाला है, वो सबको you will directly supply to that. Okay, now the first question which will arise is, who is the supplier? Whether the Amazon fellow is the supplier, whether the napkin manufacturer is the supplier, or the actual supplier of ready-made garments is the supplier. Second issue is, what will he write in the bill of the ready-made garments? Whether in that invoice he will say that napkin free, or he will say entire value along with napkin. Each of these will change his position of taxation. Each of these will make you pay a different kind of tax, a different rate of tax, and therefore these transactions have to be handled with care. Over here, I will just draw out the issues. Answers anyways I don't have. Tomorrow is brain trust. Refund. We are almost coming to the closing of our session. There are 3-4 slides more. As far as refund is concerned, it is going to come late. Should I continue or should I close? Because it is 5 o'clock already. Continue? Everybody, yes? Yes. Thank you. Any person claiming a refund of any tax interest, if any paid on such tax, or any other amount paid by him, will make an application before a period of 2 years from such a relevant date prescribed. Okay? However, in a return, see this section 49(6) is a return section, payment section, which says that your output liability is 10 lakhs for rupees, and your in ITC is 11 lakhs for rupees. So 1 lakh refund is there. That 1 lakh refund, you can carry it forward in your returns. So that refund is not necessarily required to be claimed by way of filing of an application. Okay. Then there are certain specified entities like United Nations organization, consulates, etc. They will be given a separate number. Whatever taxes are charged to them, they will be able to claim the send-back, refund of that amount. Within 6 months, they can apply, and all that procedure is there. Now, another important thing about refund is, because of lots of litigation, today what happens is, if there is a litigation, and if you win the litigation, the question will be that the court can direct to say, हाँ, इसको refund दे. there are many cases in the customs law actually. What happened was, under the customs there is no provision to give interest. They will confiscate your gold, they will send it for verification, and after 1.5 years, they will say, it's a pita. So there was one gentleman who filed a writ petition. And the moment he filed a writ petition, the entire customs department laughed at him. क्या पागल है ऐसा आदमी है, जिंदगी में कभी कस्टम में किसी को इंटरेस्ट नहीं है, देखो इंटरेस्ट मिल जाएगा, जिधर जाने का होगा. Unfortunately, what happened? He proved his case so successfully that he was entitled to get the refund amount with interest. Because of this, then slowly and steadily, for whatever unjust thing that happens to you, people started moving to the court. And then what happens is, the court, in whatever circumstances, takes a certain decision and can say, okay, tax is refundable along with interest. So, in income tax also lots of times it happens. Then you have sandification and all that. First they said on interest is also available. Then they said it is not available. All that process goes on. Here, they have taken care. They have said that these are the list of 6 items. If you fall in these 6 items, then only you will get a refund. No court, no authority, whatever it may say. अगर ये 6 clauses में तुम्हारा refund बनता है, तो लेके जाने का, otherwise भूल जाओ. Okay? So, this is very important because you may have cause of action. The law may provide a remedy by way of writ. But because it doesn't fall under this provision of 6 clauses, you will not get it. So that is one important condition. That's why it says refund to be issued subject to conditions only in the following listed circumstances. That means in these circumstances only you will get a refund, otherwise you will not get a refund. Okay. Or tax paid on zero rated supplies or inputs, unutilized input tax credit. Now, if you have an unutilized input tax credit, they have described only 2 situations when you can get. Otherwise, you can never get it. Okay? And those 2 situations are input or input service used for zero rated supplies. Okay? Then you will get it. And inverted duty structure. What is inverted duty structure? Your inputs are taxable at 5%. And your output are taxable at, your input are taxable at 18% and your outputs are taxable at 5%. So you will always ending up in a refund. This is an inverted duty structure. Okay? In such situation, you will get a refund of ITC. Otherwise, never you will get a refund of ITC, except these 2 situations. Of course, this is also subject to conditions which come to next. Refund of tax on supply which is not provided. So if you take it in advance and if you are not provided, there will be a refund. Okay. Now, if you have paid tax as IGST, okay, instead of CGST, SGST, then you will have to pay the tax. You don't have to pay interest. But if you have paid CGST, SGST instead of IGST, then there will be a question of liability. So if you pay one tax instead of another, then you have to pay that one and then claim it. When you pay the other one, in one case you have to pay interest also. But if it is IGST and you are moving on to CGST, SGST, then you will not have to pay interest. Tax and interest on any other amount paid by applicant and the tax incidence has not been passed on to any other person. Okay. Now this is very important because today what happens, you have paid a pre-deposit and you expensed it out. Ultimately you won the case in service tax or excise. Okay. Then they tell you, you show me unjust enrichment happening. And you tell you have expensed it out, so I will not give you refund. Now, can you say that because they have said that tax interest or any other amount paid by the applicant and tax incidence has not been passed on to any other person, right? Then, even if you have expensed it out, you are entitled to a refund. Okay? Of course, this is a dicey stand because the government department is structured in that manner. So he is going to ask you unjust enrichment दिखाओ, okay? And then he will say नहीं आपने expense out कर दिया तो नहीं देगा, balance sheet में खड़ा है तो देगा, नहीं तो नहीं देगा. So that care, but of course legally now it appears that it is possible. Tax interest borne by a class of persons notified by state government or central government approved by the council as eligible to claim refund, United Nations, etc. etc. Okay. When can you claim input tax credit refund? These are the conditions. Refund of input tax credit is available only on Input and input service used for zero-rated supplies. Credit accumulated due to invoice service. Time limit for application of this kind of refund is not. See, in the first clause, we read that any tax, interest or other sum, if it is paid and if it is refundable, then within 2 years you will apply. But this is not tax interest, this is input tax credit. There is no time limit which is prescribed under the law. So either you do it immediately, or the reasonable period would be 2 years from the relevant date, which is also there for the first clause. So you may read that 2 years in this, but legally no specific time limit or deadline has been specified for this particular thing. No refund of input tax credit if exports are duty payable. Supplier on export avails duty drawback. Supplier claims refund of IGST on sub-supplies. Supplier has not filed his refund and paid taxes. So if you have not filed your returns, your refund claim of IGST can never be allowed. Okay? If you have a demand in your return, for whatever reason, some 73 or 74 section may, you have been issued a show cause notice and there is a demand, and you have gone in appeal, and that amount is not stayed, then you will not get a refund. Like in income tax, you will not get a refund. Okay, it will first be adjusted. They have the power to adjust it. Okay, 245 kg. Other conditions, of course, the refund amount should be more than 1,000. The refund application will be disposed of by way of an order in 60 days. In case of a refund of zero-rated supply, right, 90% of the refund amount claimed will be given to you provisionally within a period of 3 days. But if you are claiming ITC, 60 days के बाद ही मिलेगा. अगर IGST भर के, if you are applying for refund for exports, then or zero-rated supply, that means, then you will get it within 3 days. It's your option. Provisionally take it or wait till the order passes in 60 days. Which in turn means that as an exporter, if you want your refund early, you will compulsorily have to charge IGST. So this is one more way of telling you that ITC लेगा तो देने वाला नहीं है. देगा 60 दिन के बाद कोई भी ऑर्डर पास करेगा, रिजेक्ट करेगा, फिर अपील करो, maybe it will go long. So you might as well think उससे अच्छा तो चार्ज करके पहले पैसा तो ले लो. Right? So that is one option. Again, there is a provision for withholding of the refund. If the commissioner feels blah 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 are giving an opportunity of being heard, they will give you an opportunity and say that I am going to withhold your refund, and they have the powers to do that. Now, see, casual person and non-resident person. If I am, let us say, TTZ Jewellers is registered in the state of Maharashtra, it goes for an exhibition in Goa. It will have to register in Goa as a casual dealer for the purpose of holding an exhibition and making supplies from there. For doing that, it has to say that in 90 days or whatever period it wants to hold an exhibition, I will probably pay sales so much. They will have to estimate the tax. That tax they will have to pay in advance. Okay? Unfortunately, utna supply nahi ho sakta, and there is a refund. He will get that refund only after that entire period for which he had applied gets over. He files all those returns. Whatever tax is adjustable, he adjusts his own tax. There is absolutely nothing remains. Then only he will get the refund. Till that point of time, the casual dealer as well as the non-resident dealer will not get the refund. So you have to pay your taxes and file your returns for the period during which the casual dealer, as a casual dealer you have registered, then only you will get it. Till that point of time, you will not get it. These are the relevant dates. These are actually, you have to check if you are a refund claim, then within so and so period. If you are doing an export, then whenever your ship leaves or your aircraft leaves, that is the relevant date. And 2 years from that relevant date, you should make an application for refund. So this is for that purpose. Refund for, okay, now the tourist we talk, then when you go to Paris and you buy something, you will get a refund. So when a tourist comes from Paris and he buys a handicraft over here in cottage industries, he will be charged IGST and he will get a refund, okay,
What is the procedure is yet to be notified. Let's hope that he gets the refund and he doesn't have to produce himself at the airport 36 hours before the flight schedule so that he can claim the refund. Okay? So I think that ends today's talk. Thank you very much for a very patient hearing.